One way to lower your interest rate is to raise your credit score. In this week's Your Money segment, I learned about the different ways to get closer to 850. If you need a credit report analysis, the Florida Credit Union can help for free. Christine Suarez-Jenkins is here to let us know the possible solutions to improve your score. Thank you so much for coming.
Yes, absolutely. I'm glad to be here. And credit score is one of my favorite topics to talk about.
And okay, so that's very good. So it's one of your favorite. So why is it so important?
It's important because your credit score is used by lenders to help determine your credit qualifications, what interest rate you will qualify for a loan. The higher your score, the lower your rate will be because it's understanding that you're a lower credit risk. Your score can range anywhere from 300 to 850. And it's not only used by a lender, it's also used by your landlord, insurance companies, and even your employer can use it to make decisions.
Knowing that information, obviously, as you said, very important. How can one improve their credit score if they want to lower their rate?
So the credit score is very forgiving, which is the nicest part about a credit score. So there's 5 factors that make your score. 10% is your credit mix, so how many trade lines you have that are secured versus unsecured. You want to have a good mix of both. 10% is counts that you're open. So anytime you go to the store or go online and they're offering you that 10% off for open a trade line, be careful because that can affect your score if you open too many in a small window. 15% is length of credit. So that card that you opened up when you were 18, 19 years old, it's good to still have it even though you're not using it because that lengthens your credit score. The last 2 really drive your score. So 30% is credit utilization. Say you have $1,000 in credit card limits and you owe $1,000. While that's not a whole lot, it's 100% utilization because you're using everything that you have. So take that same example, $1,000 in limits, you owe $300, that's 30%. So your credit utilization is 30%, which makes your score go up. The last is how you pay your bills, 35%. So making on-time payments allows your score to go up. Now, let's say you do have late payments or you have a lot of credit card debt. The good news is you can make those payments on time, and those older payments, as late payments become older, then your score increases. And then as you pay your debt down, your score increases. So credit scores, while you want to have, higher score in 850, if you do have a lower score, there are ways to improve that score.
Thank you so much for explaining all that. You even mentioned things that I didn't even know, so I love that I'm learning from this too. And if you have any questions or concerns with the Florida Credit Union, they can definitely help you out. All their information is on our website. Christine, thank you so much for coming.